Okay, let's get going here. All right, nice. So I had Tesla up here. There was some news on it, and I guess it was up a little bit. I just take a look at what I see in the news there. I think Morgan Stanley had some positive comments about it. I didn't read the article, but maybe it's bottoming out here. We shall see. All right. So the markets followed the down scenario yesterday, and we talked about the consolidation here and how it would act up there, and that, well, if it could get through it, there was a void above to rally that would set up a sell setup up here, or somewhere in between here and here, not necessarily all the way up there. And also said, okay, that's one scenario if it can consolidate at the resistance and if it could get going. The other scenario was down into the void below. As it turned out, it was down into the void below. Now it's at this lower level of support. And so let's just move this up to make it clear that support and resistance are always areas. They're never exact points, even though at times they may turn out to be exact points, especially to the Fibonacci aficionados that will show you their 0.682 fib level and how that was the point. But anyway, if you look at them as areas and be a little open as to where buyers and sellers will show up, you'll be a lot happier in where you're looking for turns to happen. And then just looking at, Andre, I've kind of forgotten as to what their exact numbers are. Oh, from the years of kind of dispelling that hocus pocus. But thank you for that. And so now we have this little grind to the upside. So we go through the same process that we do every single time, right? Factory work. That's how we do our analysis, and that's what produces consistency if you're willing to do it. So the analysis is about a thought process and interpretation of what's happening in the context of the past, what did happen as we look at a chart. In other words, we look at multiple time frames and say, are trends in alignment, or is one up and one down, is one sideways and one up, and so on. As it relates to yesterday being a wide range red bar, it's got a small tail, so buyers did step up it a little bit toward the end there, and they didn't run away, meaning when it bounced a little bit toward the end of the day there, they stood their ground. And so it wasn't impressive, but nonetheless, it didn't close on the low of the day. Now, as far as where retracement should go, exactly the same thing, where we'd say, okay, red bar, wider range, and halfway above would still hold that bearish view as to retracement. And that's just a general thing as to common sense. How far can it retrace into the red bar? So that would be our observation as to if prices can get through there, maybe this is where markets are going to turn. I'm hopeful that they don't, right? Because the ideal historical scenario, and it's not what I want, it particularly meaning I'm not trying to dictate what should happen. It's more of historically, I know what does happen when it sets up a fantastic opportunity. And that would be coming down to this level down here and retesting it. And not only retesting it, but it would be very okay if it actually came down here and made a slightly lower low. So that would be pretty ugly over the next couple of days or so into the middle of next week. That's what we talked about at the end of the day yesterday, was that this scenario, right, holding and prices moving lower. They might turn right there. Sometimes it happens right there. It might happen just above. We don't know. It's an area, but we get like an extra point or bonus when it takes the low out and then reverses up, because that it takes out the stops, which has an effect of eliminating some of the potential supply. Just think about being long. Say you bought above here, looking to sell up there, and now yesterday you got stopped out. Well, you're not hanging around looking to sell here or here anymore. You're gone. So, and when stops get taken out, that's part of the thought process of interpreting a price pattern and its effect on the potential for prices to move. So we have internals that are lined up last week at this low, and we got this little bounce here. And I'm, again, hopeful that this is the extent of that bounce. And we'll just take a look at those internals quickly. But you can see here, yesterday, the idiots loaded up on puts. And so our sentiment, the ideal situation here, and this is what will happen historically if it plays out the way I am explaining it. Not that I know what's going to happen. I just know historically this is what does happen, okay? And this is it, meaning this going down to here, right? And even if it makes the lower low, what historically happens is our breadth internal will be here, making actually a higher low, saying that there's some strength within this market. Your job is to go find it, right? My job, your job, is to go find where there's being relative strength, and our sentiment internal will probably come down here, where traders become even more bearish as prices go down. And that, of course, will make sense with this drop and move potentially down into this area here. So we'll see if that plays out. Right? That is one of our scenarios. Right? That's what we have. We have scenarios, opinions as to where prices should go based on a past pattern, historical pattern, and what's happening right now. So we'll see. Right now, prices are kind of, well, let's see. I can say exactly where they are. It looks like 277.50. So down below that halfway point, right? But pretty close, right about there. So we'll see at the open whether this gets sold or chops around here. Look for breakout failures as far as possible short setups. And if it goes sideways for a half hour, well, that would be kind of encouraging to the bulls, I guess. But we'll see what happens. Q's had an uglier day, and as you can see, that's not halfway up there, kind of grinding up, but into the void below. So this couldn't get above to push higher. Right? It was closer to the resistance area, makes sense. Fell down into the void, which created a void above. Now, how far can it get up above there? And ideally, it's going to stay right around here, and then it drops the way we want the spiders to drop. Let it drop down here. Maybe the Qs, since it led the way down more so than the spiders, maybe this makes a higher low where the spiders make a lower low. So these are the things that we're going to have to watch for and see how they play out. I don't think, buyers are going to come to the rescue after yesterday on a Friday. But, this is what we do day to day, is see what is, from the yesterday and put it in the past and see how today develops and put that all together and to find high probability opportunities. And what I'm hoping for and looking for here is not an intraday high probability opportunity. I'm looking for a swing opportunity that could last weeks and maybe into the end of the year with, the holidays and the Christmas rallies, and there's negative days along the way there. So, when we get near Thanksgiving, sometimes the lead up into that is a few negative days, and the holiday is a great trading day for half a day trading and so on. Those historical seasonal tendencies, they do play out. Down phone. So, we'll see. We'll see how this all shapes up, but we've got our scenarios, our game plan, and we'll see in the coming days which one of the scenarios actually comes to fruition. And until then, we'll just put the bar by bar analysis in the context of what is. The Russell really led the way down, and this one may actually start to show the relative strength. And since this market internal is taking into consideration thousands of stocks, it's possible that it won't go down as much, and that may be part of what creates this higher low in our breadth internal. Again, I'm repeating, but we will see how this all plays out over the coming days. And when I review this as to whatever happens, if this turns out to be, and I haven't talked about it, if this turns out to be a big green day trading above here, that is a mess. We do not want that, believe me, because that is going to lead to a little bit higher prices, and it's going to be grinding, and the ideal scenario is to go down. And let's look.
But I think you would lead to put spread candidates for next week.
Not me. You'd have to find stuff like maybe, what was I looking at yesterday, CSX or something that was already crushed and down testing the prior lows. Something like this, right? That is nailed. And maybe it starts to, turn, but it's going to have to be very selective as always. So sometimes at turning points, you go to what was the garbage prior to the turn, because that's what might stabilize first, because it's already beaten down. So be careful. With turns are vicious many times and whippy. So keep that in mind. And when we have what I call the event, which will be everyone will see it and recognize it as the turn. So it's unlikely that it'll be today. Looking at the futures, so far we got an inside day, and, maybe today just winds up that way. I kind of hope not. I'd like to see it go down, but, market doesn't always follow my wishes, that's for sure. But if it's an inside day, it's going to be a bored to death day, which we've had some of those. And ideally, this will turn red. So one of the first things to do is to be aware of where it opened, right? Which I was right about that price where I'm holding. And you can see the orange thing there, that area. And that actually might be the line right there, that red line, I forget. I believe it is. So now that it's making a slightly higher high on the 60, if this was to drop below here, consider shorting. Because now you've got an M top at an area of minor resistance, and we'd look for prices to at least go down to yesterday's low, and maybe it keeps going. We'll see. And Qs, similar situation, retesting here. Can it get through? If it goes down below 71.56, that would be a short trigger. Stop above these highs, see how far it goes. Dow showing a little bit of relative strength, but into minor resistance. Same scenario, see if it breaks below the prior low. Bonds, down a few ticks here, just kind of sideways sloppy. So this would be beneficial to a sell-off in the market if this went down. And as I'm looking at this, what would the scenario be to actually help the market? Well, bonds collapse here, prices, yields go up. Buyers start coming in to buy bonds here near the low or slightly below. They start to rally. Yields come down. That helps equities, since the big focus right now is interest rates. And that could be part of the scenario that plays out for, a rally ensuing. Oil stabilizing here. Had a big retracement from making that new high that had a breakout failure. And so it would make sense for oil to start to stabilize here. Energy just got beaten down real bad after making a peekaboo new high there. And a nasty kind of thing to happen, to collapse of that size so fast. But it's kind of the MO of this recent market. And gold held it up really nicely here. Impressive wide range bar. There's the void. And this is what the market could have done yesterday, or as it was going sideways at resistance. Remember, we saw the wide range bar in the broader markets, and I said, okay, that's was on the daily. That was the void in the smaller time frame, but it went back down into it, whereas gold is holding up and going sideways and creating a new support point. So that's bullish for gold. And it's holding up quite nicely here. That being said, Dan, I'm sorry, but I only given you a few minutes to the open.
Oh yeah, no worries. Yeah, good morning, everyone. Yeah, because we have extremely low number of opens, and that's on purpose because we haven't found anything worthy. Yeah, when you were looking at the futures there in gold, look at that compared to GLD.
Well, the futures trade 24 hours and GLD gaps because of that.
Right. But still, these tails, an ugly red bar, your futures look fantastic.
Well, anyway. No, Dan, come on. The concept that we have after a bullish move, red bars being ignored and tails being ignored, which they are so far, is somewhat expected. I mean, this is coming from a bottom. It's not at an uptrend, but still, the bar by bar is giving us clues that, just even looking at this chart versus the futures, that buyers, are not going away.
Yep. All right, Moss, put spread. We've been in this for a while. It expires today. Worthless.
And that, Dan, just to make that clear, expiring worthless is a good thing for us. Not
right,
like,
right.
Yeah.
Right. But worthless means we sold them, so we've made our max profit, of course. Yeah, thanks for the new people. Sure. Yeah,
well, someone on YouTube might be thinking, why are you so happy to have a position expire worthless?
I never even thought of that, but you're right. Because I say we're short put spreads, and that explains it, but the way I talk fast.
Right.
Yeah, whenever we sell options, we want them to expire worthless because that's our max gain. So that we're in this cannabis ETF. We have two of these on, actually. One that's also going to expire for max gain today. And then we have another one. The one today, the strike price is $35, the short strike. So we got to sit through all this with, very little concern. Our one for next week is the 32s, way the heck down here. So that one's fun. Our little Goro, we trail stopped out of that yesterday. We sold into thirds, 3 lots on the way out for an nice average gain. FL, we have a put spread for next month, and we're actually flat in our weekly. The IYT we got out for a nickel, which was our target, and so we booked whatever 65 divided by 70 is. That was our maximum gain, so that was a good trade. Let's look at a couple of gappers here now and try to come up with the best ones for today. Little China net online, whatever they do. I don't like the way it trades, but something's going on there. It's getting some action. Clovis gapping up. That's a very bullish. We got to check the sector to make sure it's not a bio, but that's a bullish gap. I don't like the way it's trading pre-market though. Ozark. What the heck happened to Bank of Ozark? Jesus, that's an ugly cap. Look at that. I got to go to the monthly chart. Wow. What a run this has been on since from 09. Look at this late 09 breakout after the financial crisis. Honeywell had earnings. Bullish gap, but it's a deep retracement here pre-market. This is my 15-minute chart, and whenever I trade gaps, I use the pre-market pattern just as if the market were open. The market is, these are real trades, of course. It's just not as liquid, but I still read the patterns to see what happens here. So, you know, roughly 159, market off here. It's a bullish gap at the resistance, and the pre-market's becoming iffy. So that's not what I call a tier one setup. Tier one are the ones that we're putting in the batter's box because they're warmed up and ready to hit. We just got to go to our intraday setups and time them with the futures. This is an ugly, ugly day yesterday. So this was a climactic buy setup on the 15-minute chart. Multiple red bars, accelerated lower, reversal bar. If the market were still open yesterday, this for a day trade, that's a great setup. I mean, it took out this prior low on the daily. You would buy it over this bottoming tails bar, and now it's gapping up and coming in. If it were to have a nice reversal bar right here, then that might give you an entry for a scalp to day trade. VFC. Now look at that pre-market. That alone is telling me I have no interest, none. 86 bucks. So it's actually gapping down now when it was gapping to 90 earlier. So that is a total mess to avoid. 30.72, market off on the daily. There's no price void because look, your target would kind of be this breakdown area. If I were to blow up my 15-minute chart or hourly chart, this $31 because of this bottom and this bottom is going to be major resistance. Slob had its earnings also, no pattern, and it's a mess pre-market. Procter & Gamble, bullish gap, but it's to resistance, and it's an excessive gap. KSU earnings, there's no print yet. This is still pre-market. So it's kind of, the specialist is slow to open up. All right, this is not, but this I like. If this holds, so it gapped up, came in, kind of hard though. But if this maybe were to set up a double bottom on the 15-minute chart, I like this retest pattern the sell puts on and its earnings, which means it's a put candidate. I'm going to put that in a thumbnail and I'll watch it.